On the Spot with LuxLiv, talking property, business and success in real estate.
So are you happy with the interest rate cut?
So we would like to have seen a slightly better interest rate cut. But, the governor made his point quite clear in that there are certain aspects within the macro and microeconomic environment globally and in South Africa that we really got to pay attention to. And 50 basis points, 25 basis points, 25 basis points is better than nothing. And as the governor once again said that they are not going to forecast anything. They will look at the interest rates on a meeting by meeting basis and determine what happens with the interest rates at that particular meeting. But we're on a downward trend, which is positive. So that's what we needed to see. We were stuck in a really high level interest rate for a number of years, and for us to see a reduction in interest rate is a good sign.
Do you think we'll ever get to interest rate of COVID times? Yeah.
I mean, there were certainly aspects from COVID that forced the interest rates to go down. But I believe that we should stabilize at around 10.5% pre-COVID. I think we were at about 10.5% pre-COVID, which was a comfortable environment to be in. Our consumers weren't as cash strapped. Even the 25 basis points at the moment are going to alleviate homeowners as well as just the average consumer by just that couple of R100 reduction in their contractual debt can make a difference.
Okay. Look, I mean, on the one hand, you would think as low as it can go, that's amazing. But I'm sure there's a lot of people out there that if they rely on high interest rates, your pensioners and all that, so there will always be someone unhappy.
Yes, yeah.
So for you, the golden number would be between around the 10.
Yes,
that's what you're thinking.
And I mean, I suppose we're selfish because we're in property. Our purchasers need bonds, and we want to try and get the best possible repayment for that home buyer. And yes, the investors do suffer, unfortunately. So it's a catch-22. But I mean, the bank's also forecasting that we'll see a gradual slow in 2025, or a gradual reduction to around 75 basis points in 2025.
Further.
Yeah.
Okay, so 3 more if they always go by 0.25.
Yeah.
So just for the layman out there, what is this basis point story? What is 0.25? Is this part of a percentage? What is it that we're talking about?
So when the Reserve Bank talks about the repo rate is the rate at which banks lend from the Reserve Bank. That's sitting at 7.75% at the moment. The margin on that is the interest rate. So between the repo rate and the interest rate is what the bank's margin is on that particular transaction. So we always look at interest rates when we're talking about investments. We're always talking about bonds, vehicle finance, credit cards, store accounts, and the repo rate is the rate at which is the interbank lending rate between the Reserve Bank and other banks, commercial banks.
Okay.
So 25 basis points means if we're at 11.5% today, and people will say 25 bibs or 25 basis points or 0.25% reduction, that takes the interest rate from 11.5 to 11.25.
Okay. And next year we must expect further. So that means the property market that was we should hopefully hope for more, interest rates decreases, which means the property market was a bit tough the beginning of this year. So does this mean you're optimistic for 2025?
Absolutely. And I think what is vital is that we need to get first-time home buyers into the market. First-time home buyers stimulate the market. And actually in October 2024, we saw our first-time home buyer base exceeding the 50% of our total bond applications. And it was always tracking below 50%. Post-COVID, I think it was around 52, 53%. And the first-time home buyers really do stimulate that market. The market, and they're taking the stock out of the market as well. And you'll also see the banks are starting to be a lot more aggressive in their products that they're offering to first-time home buyers as well. If we had spoken in 2008, 2009, where the banks weren't even giving 80% loans, never mind giving cost-inclusive loans, which they were pre-2008, and we had spoken 3 years ago and said, will the banks ever bring that cost-inclusive product back? We would have said, you must be crazy. But you can see now the banks are mitigating their risk and taking risk to the first-time home buyer and offering an extra 5% or an 8% to assist that first-time home buyer to cover the costs of purchasing a property.
Okay. So does this mean there's more people buying a home for the first time, or does this mean there's less of the second time home buyer, whatever? What I'm saying is, are there more people out there saying I should rather buy than rent? Or is it just a combination of both,
It's definitely a combination of both. And you got to also look at each province in South Africa differently. So the Western Cape has a very different sales dynamic to Gauteng, to
In what sense?
KZN. There's a lot more activity happening. There's a lot more sales happening. There's the purchase prices are a lot higher in the Western Cape. Gauteng has seen a reduction in transactions.
Okay.
I think it's a secret. So while our transactions are down, the population of the transactions anyway we're seeing an increase of the total population to first-time home buyers.
Okay. And so you mentioned Western Cape and Gauteng. We now have we're starting to sell now in the Western Cape as well, so that's super exciting. But what about KZN?
So KZN is definitely, I think it has its drops, but it also has its highs. Lots of development happening, in particular the north coast of KZN. We would like to see more stimulation within the Midlands and the south coast. But there's still a lot of activity and a hive of activity, in particular in the development space in KZN.
Oh, really?
Yeah.
Okay.
North coast.
But when you say development space, so does this mean developers are going in there and people are buying brand new development stock versus the old properties are more stagnant?
Yeah. So I mean, if you take a step back and see how quickly the stock is moving, your new development stock moving in KZN relative once again to Gauteng. Our Gauteng development stock isn't as moving as quickly as any other province in the country. So there's more secondhand sales happening in Gauteng where we're seeing the development stock not moving, and in KZN we're seeing the development stock moving a lot faster than here in Gauteng. And Western Cape's development stock they can launch a development at 12 o'clock, and by 12:30 the development's sold.
Wow. And when you say Western Cape, are we talking the whole of Western Cape? Because let's say now I'm an investor and I have a bit of money, or I want to take a bond and I want to do something. Are we talking basically anywhere, the entire province?
The entire province.
Doesn't matter, small towns, big towns.
Yeah. Predominantly, I mean, you've got your southern suburbs, northern suburbs of Cape Town, your city bowl.
But outside of Cape Town, your Langebans and
absolutely,
your
yes, and your Stellenbosch is another one where student accommodation is becoming a big hit, and there was a development I think they saw launched the other day, and it was also just phenomenal how quickly that stock moved.
Oh, really? Gone. So if one is to developers that have the funds, if they were to identify land in the Western Cape, they're not going to lose money.
Absolutely, there seems to be a stock issue within the Western Cape. There's not sufficient stock. Where in Gauteng we're probably seeing more of a slightly oversupply of stock. We've just got to get those buyers through, and what they're waiting for, we don't know. We did see a slight improvement on our bondable production in the last MPC meeting when the governor reduced the repo rate by 25 basis points. So we did see a bit of activity in October. November was a relatively good bond production month as well. So December we can't really gauge. We're hoping that people don't go on holiday and save their bonuses to put a deposit down for a property. So we'll see how December fares and see how that additional 25 basis points is going to stimulate our market.
So, I mean, you talk about November, October, December. What is your experience overall? I mean, just in general terms. Okay, so Western Cape. So don't you think though with Gauteng that there was just the developers went very trigger happy at some point and just overproduced, and even if I look at the Midrand area, there are overly saturated areas, and in fact I even heard that there was going to be an additional development in the Waterfall area. Then they said no, it's not, they're not going to do it and whatever. So maybe there was just too much supply too fast. It's almost like all these shopping centers that come up and no one knows who shops in all these shopping centers. So same with housing. Or
Yeah, I mean, we saw a huge influx of units coming in. You talk about Waterfall, Santon CBD.
Santon, yeah, big one.
Yeah, and unfortunately, they launched but never developed. Is it, there's a couple of questions one needs to ask there. Is it pricing? Is your second-hand market cheaper to purchase than your new stock? Have we got people in the environment that we sell in that can afford that particular stock as well? So it is interesting. There were some signed deals in those big developments, but the pre-sales just were not there for them to take off. And I do believe that in some of the cases, your secondhand stock is more affordable than your new development stock, given the fact that your construction prices are so high and it's expensive. It's expensive to build at the moment. And we just need to see that shift. We really do need to see an influx of buyers, whether they come back from wherever they've semigrated from, northern coast of KZN, Western Cape. We did see a big departure of people moving to the coastal areas because of COVID and remote working. But what we have found is companies are starting to say that they want their employees back in the office, and you can't really work and commute. It becomes very expensive if you've got to be in the office 3 times a week. So we have certainly seen some people moving back to Johannesburg, because of the fact that their businesses are now requiring them to come into the office.
Okay, so I never even thought about that. So a lot of this, the demand reduction is because people thought they're going to work from home, by the seaside, the influencer thing,
Correct.
Feet in the sand, and and I never thought of that, because I just thought maybe people just produce so much here. But look, I think there's probably a combination of everything. The demand's definitely not as much as the supply. And the price is definitely, I mean, you see the variation in the property prices per square meter. You can still find 7,000-8,000 rand per square meter under roof properties in the whole of Gauteng area, probably even less in the older buildings, 6,000 per square meter, whereas the newly built stuff now is launching at the lowest 14,000 per square meter. Apartments, speaking of, your Santons and surrounds, apartments are launching at 40,000 per square meter. So massive difference.
Absolutely.
Yeah. Whereas with the Western Cape, I think it's pretty much, the prices are higher, but the supply is not caught up yet. And you hear about George, apparently no supply.
Plate.
But eventually, I think it's going to catch up, and then it will kind of even out. So tell me, what is your highest bond you've ever gotten? Like at some point, I thought 21 million was the highest I've ever seen. I've just saw now one of 23 million. What have you?
Ooba as a whole, as a
No,
business?
well, you personally, yeah.
Oh gosh,
I'm sure you Ooba as a business, yeah.
So I can tell you, Ooba as a business was 42 million rand, and that was
Wow.
like a 52% loan to value. So that is the highest bond we've ever.
So that was an 84 million.
It was 100, and I think the sale was 100 and something million rand. And we did I think it was 42 million rand.
Okay.
Not in Joburg. Probably
In the Cape.
Yes. For me and my team, geez, I do so many. Probably at around 20 million.
Okay.
20 million.
Okay. So Gauteng, you say that's
Yeah, I
The
mean,
20.
we don't really see sales of 120
I've
million
never.
in
Yeah.
Joburg. Maybe Coronation Street in Sandton, but or Empire Street in Sandton, but um, we haven't seen one of those in a while.
And there might probably be cash buyers. Yeah.
Absolutely.
So that's where, if you might not see the bond, but
Yeah.
there might be something along those lines. Yeah.
But I mean, that's also interesting when we talk about you don't necessarily see bonds at that level. What we did see in post COVID at 7% is because it was so cheap to get money. You would see your historically cash purchase transactions moving to bonds because it was cheaper to bond than to
Yeah.
bring their funds offshore or to pull out of their investment accounts. So that also stimulated the bond market in those days. Was somebody buying at 20 million, let me take a bond of 10, let the bank take the risk
Yeah.
and then see what happens with the interest rates. Many of those people, I'm sure, have paid off
Yeah.
that bond now because it did start becoming expensive.
Yeah, because I think a lot of people were treating it, the flexi bonds as basically a cheap cash flow
It was cheap money.
situation. Yeah,
Cheap money.
yeah. Not anymore, though.
Not anymore, unfortunately.
When was the one time there was interest rate of about 20%? How many years ago was
Sure, that was way before my time. I'm very young. But it was. I think it was 94, 95. I think it was 94.
There must have been later than that because I came to South Africa in 97, I think.
Mhm.
And it must have been around then, maybe. I think, well, yes, because I wouldn't have thought of that otherwise. Yeah.
I mean, the year I can't remember, but yes, it certainly was
Yeah.
a really challenging time for everybody. But once again, I mean, when you talk to real estate, there were real estate agents working in that time, and guess what? They sold houses.
Yeah.
So,
Yeah.
once again, I still believe that if you've got a willing buyer and a willing seller,
People have to live somewhere.
absolutely.
Yeah. When did you go into specifically bond origination?
In 2005.
What were you before that?
I was in banking, so I am a banker. I was one of those private bankers where where I promised my client that perhaps I could get them the best deal. Where now I'm sitting on the other side of the fence, and no disrespect to any private bank, I did it for many years. I'll do a bit of a sales pitch on origination. One always has to keep their options open. One always has to know what the other bank is offering, and does your bank always offer you the best deal, which is where origination comes in.
Okay. Were you one of those private bankers that answered your phone or not? Because mine never does.
So
I'm not going to say which bank he is with.
So when I first started in private bank, I was fortunate enough to our limit was 50 clients. So it was true private banking in those days. And then when I left my bankers had portfolios of between 300 and 500 clients. So that's become very difficult to manage.
Okay.
But there's a place. There certainly is a place for them, and they not only assist you with your home loan, but there's also a myriad of other products that they also have to try and convince you to buy and create a share of wallet for the bank.
Alternatively, they just never contact you ever, so they don't have to convince you to buy anything. Yeah,
there's 500 people.
There's an option.
It's a bit difficult.
So you never looked back because 20 years then you're in bond origination.
Yeah, I took a little bit of a break between 2008 when the market. I went back to the bank for 4 years, and then I came back, and I've been back for 12 years. So
okay, and always with the same company or different?
Always with the same bank, and always with Ooba.
Yeah. Okay. And initially, what made you decide to jump into bond origination? Because you could have done many other things from private banking.
So it was very new. I mean, we've been around for 25 years. So origination started 25 years ago, and it was something that really fascinated me. It seemed like in those days, which it was easy. We weren't restricted by the National Credit Act in those days. We could security lend, so they didn't have to. The requirement wasn't that your bond repayment exceeded 30% of your gross monthly income, and then you needed to verify net surplus income. No, If you had a client that had a 10 million rand property and wanted a bond of 5, the banks would gladly give it to you because they were security lending. They had sufficient security to cover if you defaulted.
Not anymore.
Not anymore. National Credit Act came into being after the economic meltdown in 2008, 2009, where the National Credit Act stipulated that banks cannot recklessly lend and need to ensure that the client can afford the facility that they're giving to the home buyer or any client, vehicle finance, any sort of debt.
Okay, so you joined before that initially.
Before
Yeah.
and left, and then came back to NCA.
Yeah.
Yes.
Okay. So that's interesting. So you decided to try that because it's just something different.
Yeah, it was a hive of activity. It was something new in the market. It created a lot of excitement in the market, and I thought I wanted to be part of it, and I never left.
What were people doing before that? Before bond origination?
Majority banking. So before origination actually happened, what would happen is that bank consultants that worked for a bank in their home loans division would call on real estate, and then they would ask you to please assist with the purchaser. Now, in those days, you had building societies and you had banks, so you could have had up to 8, 9 people calling on you. And what origination ultimately did was consolidate that into one platform for a home buyer and a real estate agent to deal with one person instead of having a number of different people from different banks calling on you. Save the banks money because they didn't have the cost of paying the staff members, vehicles,
Right.
and the like. So that's what happened. That's how
Okay.
origination came about, was the consolidation of these bank consultants from their home loans divisions walking around real estate. Origination put the consultants in the real estate offices, were first to see the offer to purchase and first to make contact with the client.
That's actually fascinating, but I mean, that's not unique to South Africa, right? There's other countries that...
Absolutely. The idea did come from Australia, but also we're quite unique in South Africa in that we've only got a 5-bank offering. So 5-6 bank offering. In other countries, you've got up to 30, 40 different offerings because there's different products with different lenders, with different banks. We've got 4 commercial banks, and if we include Investec, 5 commercial banks, and then SA Home Loans. So we don't have the vast lenders out there as other countries do.
Right. Okay.
So it does make it easier, because imagine having to try and sell 40 different products. I mean, pension-backed lending, a whole lot of things, security lending, securitization lending. It gets a little bit tedious.
So did you start as a straightforward bond originator yourself, or did you immediately start with managing people?
Managing people. I left the bank managing people, so I came in managing people, and it was easy. It was easy for me to transition in because I understood the credit policies. I understood what a credit manager looks at to make a decision for any sort of lending.
Okay, but you guys have a lot of ex-bank.
Yes. It's important. It's important to understand what the banks look at, and it's very easy to try. I mean, one can learn. But it just seemed a natural progression when origination started to bring those people that were calling on real estate into our fold from the banks, and our average tenure within our business is I think 12 years. We don't have a big movement of staff. We really
unlike estate agents, ours is a very, very different.
Yes, absolutely.
The polar opposite, actually.
Yes.
So what you're saying is, if we want job security, or rather to settle into a job, we should rather then decide to jump over to you guys.
If you can handle the pressure, absolutely.
Do you think the pressure of real estate is less of the pressure of bonds? I think the question is, can you handle an estate agent?
Well, that's it. I mean,
Bring your books.
We've got estate agents, we've got buyers, we've got sellers, we've got conveyancers, we've got the banks, we've got and also, I mean, and real estate knows it. Purchasing a property is such an emotional transaction.
Yeah,
we have an agent that wants the sale, that's desperate to get the seller the best price. We've got the buyer who's panicking. Is the bank going to give me the bond? The bank saying, well, I've given you the bond now, please make sure that the client goes with us, but our value proposition is to ensure that we get the best deal for the client. So bank, hold on.
Yeah.
Let's wait for all bank offers, and then you let our buyer make a decision. So there's a lot of emotion within both of our businesses, within real estate and with bond origination.
Yeah. No, but you definitely, your people sticking around for long.
Yeah.
Okay.
Yeah.
And what else? I mean, you guys don't just do bond origination
No,
as Ooba.
no.
What else do you do?
So we what we try and do is we take a step back and we look at the ecosystem of a homeowner, and some of the really interesting products that we have, and I'm sure there'll be many more to come. Is our CEO Reece Dyer is always looking for an opportunity to make our business partners and our clients' lives a lot easier. So if we start right at the beginning of a home loan process, is we get an understanding of the client's affordability. So we have tools. We've got what we call an Ooba bond indicator. We've got a qualified buyer certificate where we do a thorough analysis of the client's affordability before going house hunting. So what that allows that potential home buyer to know is, what am I in for? Can I afford £1 million? Then go and look for the property in £1 million once you've decided what area you want to live in, and then start following through on your portals. So that's getting a much better understanding of your affordability before going and signing an offer to purchase. Then we do the bond application and the whole home loan process. Once that bond is accepted, we then also do have a credit life policy which we're able to offer the client. So what happens there is that in the event of death or disability or retrenchment, this policy will pay out the bond until such time as either they get work, or in the event of death, that the bond will be paid. And then we also do offer homeowners cover, which is your brick and mortar cover as well. We also do have a business that sells short-term insurance, so we're almost like an originator for short-term insurance as well.
Underwritten by whom, or is it your own product?
It's our own product. So,
okay.
So we brokerage it out, and we get the best possible deals, as we do in the home loan space.
Okay.
Within the offer to purchase transaction as well, is a consumer has, when they're paying a deposit, either paying cash or paying a deposit for the for the purchase of the property. There's really three options that a consumer currently has. The first one is that they pay the deposit into the real estate trust account. Many real estate companies don't operate trust accounts anymore, so that's not really an option. The other one,
we do, but for rentals.
For rentals, absolutely. Yeah. The other one is to pay the deposit into the seller's conveyancing account, so the transferring attorney's account. The third is to go to the bank and ask them for a property guarantee, where they will hold the funds in an investment account, and then they will issue a guarantee in favor of the buyer to the transferring attorney. And a product we have is a product called Buyer's Trust, where we open up an account, a TPFA account, an investment account in the name of the home buyer. We then issue guarantees in favor of the home buyer to the attorneys, and we pay out on instruction before registration. The nice thing about the Buyer's Trust product is that there is cybercrime in South Africa is unfortunately becoming an epidemic, and we do see a lot of phishing and scams going on. The nice thing about the Buyer's Trust product is that everything is done digitally. The account is opened in your name, so when you are transferring money from your account into your TPFA account, it's from Justin Easthorpe to Justin Easthorpe, not to a third party. So that it certainly avoids that, and there's also additional benefits with regards to reduction of fees as well.
So, of course, as a seller, I'm going to ask, okay, but then what's my assurance that the deposit that you paid is actually not going to be withdrawn?
So we are a registered financial services provider, and we have a fiduciary fund certificate as well. So we hold at yours. I mean, it's a stock standard guarantee, as the question would be if they were to transfer it into your trust account,
or the attorneys,
or into the attorney's trust account, or give a bank guarantee. So we are covered by legislation where the guarantee is issued, to ensure that we hold at their disposal the amount that they require.
But my question is, you're not getting ATM card as the buyer. No. You just the money's there, the account is in your name. Can you draw the money?
Because it's not a current account or a savings account, it's a TPFA account, so no transactions can occur. In buyer's trust, you're able to see the balances, you're able to see the interest accrued, but you can't, it's not a transactional account. You have no ATM, you've got absolutely no access to it. The only person that can access it is the attorneys who instruct us to release the funds.
Okay, so safety for both sides actually, because the buyer knows where the money is,
Correct.
the seller knows where the money
Absolutely.
is.
And so do the conveyancers.
Yeah,
And so does the real estate.
yeah. Are you finding conveyancers pushing? Because I've used the product once, and happy to use it again because it was really great. It was super smooth and fast, and guarantees came out faster than the normal expectation. Are you getting any pushback from conveyancers or people in general?
No, and actually November was our record month in deposits.
Right.
So we're definitely seeing traction in the product, and I think really, I mean, we certainly weren't expecting to get 100% of the transactions out in the market anyway. But what we had to do was offer a consumer centric product to the consumer, which this is all about, is giving your consumer and your potential home buyer choice. And it's just an additional choice one has, and that's what our business is about. You've got a choice to do a pre-qualification or not. And if you do a pre-qualification, you have the ability to ensure that you can afford the property you're wanting to purchase. You have the choice when the originator submits the application to all the banks. You have a choice as to which bank you wish to choose. You have a choice whether you want to take insurance with us or not. You have a choice whether to put your funds into buyer's trust or not. So everything for us is a choice.
And you speak of pre-qualifications. People use, interchangeably pre-approved,
Yeah.
pre-qualified. If I went now onto my bank website and I just put a few numbers in, I'm going to get a message saying you should qualify for this much. Does this mean I will qualify for this much or not?
So yeah, I mean, I also don't like that word pre-qualification. I prefer the word affordability assessment. And what an affordability assessment is, and the big difference between the affordability assessment is the qualified buyer certificate. The biggest difference there between that and a pre-qualification is that a thorough investigation has been done on the client, being a full credit check. We've asked for 3 months pay stubs. We've asked for 3 months bank statements.
So pre-approval, pre-qualifications, you may qualify for or may not, depending on what you entered. What's that all about?
So there's certain banking apps where you are able to put in your own information, so you can tell the system that you're earning 100,000, yet you're earning 20,000, and you're spending 5,000, and you're spending 50,000, and there's no real double check of that information that's been put in. Neither is the credit check being done either. So with the qualified buyer certificate that we do is we do human intervention. So we ask the client for a completed application form, 3 months bank statement, salary slip, and we do a credit check. So we almost look at it from a credit perspective to verify that the information is accurate and calculate affordability based on 2 elements. Your bond repayment can't exceed more than 30% of your gross monthly income. And the second one is your declared expenses. After your declared expenses and contractual debt, do you have enough money at the end of every month to be able to afford that bond?
And that will help me because then if I'm putting an offer, I know it will be subject to a bond. I know the chances are my bond will be approved unless.
So it shoots your bond approval rate up to 90%. The only difference is, and nobody would have it, is access to bank scorecard. So when the banks assess an application, they have a number of inputs in their scorecard to determine whether that application will move to a credit manager or not. And that's where nobody has access to a bank scorecard, which is also why it's so important to have a multiple bank submission strategy when purchasing a property, because every bank scorecard is different. You often see that the client's primary bank won't necessarily give you a bond, but the other 3 banks will give you a bond. So when you do a qualified buyer certificate, you have a better understanding, a 90% better understanding of that home buyer than presenting an offer to your seller that you know nothing about. You've got confidence in presenting that offer, knowing that there's a 90% better chance that this purchaser will get the bond rather than presenting to your seller, getting all excited, getting everybody excited, and not knowing what the outcome of their bond application is going to be.
And then when you say 90%, is that based on the Ooba average statistics, or are we talking across the board?
So what we do
you
is
guys.
we look at what our conversion rate is against any pre-qualifications or qualified buyer certificates issued. So our average conversion rate is about 80% on submission to grant. That shoots up to 90%, because and for somebody selling, a real estate agent selling, or property practitioner, should I say, selling, is that if you don't get an understanding of your buyer right up front, you really are, it's actually you're going in against zero.
Mm.
And we're saying get from 0 to 90%. And also, if we know the bond's not going to go through, don't waste your time. Don't get everybody excited. Don't present that offer. I mean, you may have to present the offer, but you've got other buyers then to work with, where you know that there's an opportunity to sell that property.
So when you speak of scorecards, and each bank has a different one.
Yes.
What is that? 1 to 100? What is the bank scoring?
No, you will never find that out.
Oh, you'll never know.
You'll never know that. You'll never know what factors go into a bank scorecard
until you present an actual offer.
Absolutely. So and there's a number of things. They take bureau. They look at things like telephone numbers. They look at email addresses. They look at how long you've stayed in an address for, how long you've been employed for, who you employed with. Are there any accounts within the banks that nobody's picked up that are in arrears? Because a lot of the time what we do is we use a credit report, but a credit report won't necessarily tell you any historical information pre-24 months, which that bank may have.
How interesting. And can I tell you what's really fascinating when you said, they pick up on accounts and all these things? Where I come from, my country of birth, they don't have that central system. And it was, for me, the most fascinating thing, how advanced South African banking, credit records, all of that, how advanced it is compared to Europe. And I shouldn't speak the whole of Europe, because I can only speak for the country that I'm coming from, but light years ahead.
Absolutely.
It's incredible.
We are incredibly advanced in our banking.
Yeah. Because, literally, where I come from, you have to go and knock on the door, on foot preferably, of each bank to find out if someone has a bank account there, let alone, everything else that we can find out here when, we're doing credit checks for property, for rentals.
Exactly.
And you could literally, like you said, you'll pick up phone numbers, email addresses, all of that. And yet other countries still rely on pigeons and post.
Yeah. And I think National Credit Act, as much as it feared all of us in the finance sector, it really has given proper legislation to lending within the country, and it really is, it's a solid foundation. And you look at, each bank will have a bad debt book, but I'm sure it's not as bad as other countries. We really, our banks get a thorough understanding of that consumer before giving any sort of credit.
And of course, that helps the consumer as well.
Absolutely.
Because not all of us, I'm not great with planning my finances as well as I should. And if I go and buy a property that 2 months down the line I can't afford, it's not ideal for anyone.
Absolutely. And you see all the banks have got the back-end system as well. So if you go to the bank and you say you can't afford the property anymore, they'll assist you to sell it as well. That's where real estate once again comes in with assisted sales with the banks. So we've got a finely tuned little operation going in South Africa with our financial institutions.
So back to bond origination, because I'm just curious from a career perspective, what one needs to study if they want to go into that industry.
So I think the important thing at the moment is because origination is so established, and there's relationships now that have been formed for 25 years. Every real estate property practitioner, every real estate brand has their own originator, and that's built over many years, and the foundation of origination is people and relationships. So if you're coming in and wanting to become an originator, one would expect you to have some sort of network to ensure that you can hit the ground running. So the network would be important, because where you're going to get your leads from. And what is a lead in origination? A lead in origination is either doing a qualified buyer certificate and ensuring that that home buyer comes back to you, or an accepted offer to purchase. So there is a big element of being able to network and try and find business if you don't have it. And the second one is having a good understanding of bank policy, having a good understanding of what does a bank look at in order to make a decision on an application, in particular a home loan application. And sometimes, when we bring people in from one bank, they find it very difficult to get their mind around the fact that we're going to 5 banks. So, I'm not only now dealing with this one bank and this one credit manager, I'm dealing with 5 different people to ensure that I'm getting my home buyer the best possible deal, and ensuring that I'm getting my property practitioners offer to purchase concluded and fulfilling that suspensive condition of a bond.
But if someone's now in matric and they're looking at career opportunities, do you guys hire matriculants, or do you hire someone with a university degree? What does Ooba hire in terms of someone, let's say, starting from junior?
Yeah. So what we would do with somebody like that is a matric is required. No degree is required. We have had internships as well within our business, where we've brought interns on just to get a taste of finance. And we've had 1 or 2 stay on, which was great.
So your retention rate's not as high.
Not as high on, no. No. And because the difficulty is that networking and that building of relationships. But what we would do is we would bring them in a more junior, perhaps administrative role, and learn right from the beginning. What does a consultant do? What does a consultant ask? How does a consultant package a deal to the bank? What process follows? And then from there, you move them into a slightly more senior administrative position, where they're able to speak to the home buyer and the banks independently. And then also give them an opportunity to go out and look for opportunities. Yes, there's star turnover, and there are portfolios that become available. And that's where attrition will allow for that succession of that person to get to grow their portfolio and get to become a successful sales consultant, which many of us are.
But not only do you have to do sales, you also have to understand numbers.
Yes, 100%.
And paperwork.
100. Yes, very much paperwork. Well, not paper, because we don't like printing, but you've got your 2 screens, and you've got what the client's declaring and what you've got to capture to the banks. So you've got to know. You can't submit an application if the RTI, return to income, exceeds 30%. If the client, we just can't see affordability. You've got to understand that. Are the salary slips legitimate? What do you look out for? Are the bank statements legitimate? What do you look out for? Is there UIF? Is there no UIF? Is the UIF correct? Does the net salary tie up with what's going in the bank statement? So there's all those nuances that you need to understand, and it takes time. We would never expect anybody to come in and know it from day one, except for if they're from a bank. They should know that already.
Yeah, sure. But if one is looking at it as a career move, whether it's fresh or just changing careers.
Yeah, and we do need to get, like we say, it's 25 years. We've had people in the business for 25 years. We do need to start getting younger blood in, and we're very passionate about growing people and bringing people into the industry, because it really is a dynamic industry, and as is real estate, and there's nothing better for the property practitioner and the bond originator to share with the home buyer that their bond has been approved, and they're putting their family into the first home that they've ever owned in all their generations. There's that sense of, we put people into homes, and that's what we thrive on. That's what we live for.
Okay, that you're looking excited. So that's still excites you. How many years later?
Absolutely, 100%.
How many people do you run on your team?
22 sales consultants. So I look after the Gauteng, what we call North and West. So it's northern suburbs of Joburg and the West Rand. But in total, we've got around 230 sales consultants nationally.
Okay.
So we've got quite a big sales force out there.
Okay.
Servicing real estate.
And in your experience of your suburbs, which ones are your highest performing suburbs?
So it's the high turnover suburbs. So it's your Lone Hills, your Beverleys, your North Ridings, the high unit turnover. Anyway, Olivedale, Douglasdale, where there's lots of sectional title units that move quickly.
And they're
Sundown and
popular because they're
Northville
quite
and
central.
popular. Absolutely, absolutely.
Okay. What is a high turnover in terms of how many years would you say? Uh, is it the turnover of years that
No, so
an owner holds the property, or
what,
is it turnover in
of
bonds? Are you talking? Okay,
yeah,
okay,
turnover of sales really? How many
right.
sales are churning in that particular suburb at any one
Ah,
time? How many are listed? How many are selling?
because as an agent, we always look at certain suburbs, people just not selling,
Yes.
which is great. It shows that they're very happy. But if you are looking at it as an agent, then you might want to have more than one suburb on your farming list, because if the suburb you're trying to break into only sells, an owner will hold the property for 15 years on average. It's slow. Yeah.
Absolutely. And there are some great tools out there. So there's tools that can identify
Yeah.
in your suburb what the average age is, what, average age, how long they're holding the property for. So there are great tools where you can identify where the high turnover is. So I mean, you would imagine if we're looking at Saxonwold, for instance, the turnover of stock is not nearly as much as Lone Hill,
Yeah.
because you've got established families, generational wealth is sitting in there. What are they moving for? Are they moving for retirement? Or they're selling for retirement? Or will that house or that property remain in the trust for
Yeah.
future generations? So, yes, you may sell a house for 20, 30 million, but you may only sell one a year because there's not many people selling in
Exactly.
that particular area.
Yeah. It's similar with also some of the more higher price point
Absolutely.
areas. You find 2-3 houses sold in a year. And that's about it.
Yeah.
So.
Yeah.
What I've seen, interestingly, and I'm going to start looking into that estate a bit more, mayor style eco estate
Yes.
in the south. It's pumping with those 20 million rand houses are just flying off the shelves. It's quite incredible what I've been observing it for some time now, and you kind of just think when you're talking Gauteng, a few estates come to mind, and you think these are the only estates, but it's actually Gauteng is massive, and there's quite some incredible estates. The one area which I find is lagging in the price, which is great for the buyer, is Pretoria. The Pretoria East, you can get a property in a top golf estate for literally less than half what Johannesburg will cost you.
And also, interestingly enough, looking back and saying, is it cheap now? But what did they purchase the property at? So has that asset grown? Because when speaking to property practitioners in some areas, you're seeing that the house 2 years ago was listed at 20 million, price council down to 18 million, price council down to 15 million, and sold at 10 million. So there's a lot of that happening as well, where people aren't realizing their prices because there's almost been a deflation of property value, in particular Johannesburg. I'm not 100% sure about Pretoria, but also looking at, I would love to have been able to buy a property that was listed at 20 and sold at 10. But why is that? One has to ask the question. Imagine if I bought the property for 15 and I can only sell it at 10. What
Did you buy it too high?
Yeah.
Are you saying? No, I think it's still back to that whole supply and demand story. I think there's just not enough demand. There's a lot of supply.
Yeah.
If you talking of the luxury property market, if you are looking at, call it 10 million, there are a ton of houses, a ton, and a lot of the estates that are now producing new properties, and there's a few new estates they can't even sell. I mean, there's some estates that are over 10 years old and they haven't sold 50% yet, and the top estates with a lot of money put in there, massive infrastructure, there is just not enough demand. Whereas I was talking to someone about Valdevi the other day. They had a couple of years of where they were reaching out to all the agents in the country, maybe just pushing for that sale. Now, apparently, you can't even, you have to go on a waiting list to buy something.
Absolutely.
So I think maybe it's coming back to Joburg as everyone starts coming, the whole of Gauteng actually, as everyone starts coming back. But I think currently we're dealing with massive supply. And if the demand starts at least, coming up a bit by, I would say maybe by 30%, then we're going to start seeing realistic prices. So I don't necessarily think people that are now forced to sell for less bought too high, because the question does come up sometimes. And of course, sometimes you can have someone buy too high. But I think the biggest issue here is that there is just so much to choose from.
Absolutely.
It's a huge.
I mean, what would be interesting is to look at the split of purchases in Valdevi as well. Is it foreign buyers or is it locals? Western Cape seems to. I mean, I'm not sure. They're saying there's not as many foreign buyers, but I think there are a lot of foreign buyers coming back in.
There are definitely a lot. So the inquiries are increasing a lot. I've seen that, but I think, and again, this is very much anecdotal, but I think it's a perception out there that it's all the foreign buyers that are buying the high-end properties. From my side, I can say with our high-end properties, it's less than 10%. I would say even less than 5% that are foreign buyers. Everyone else is local people. So absolutely wrong perception there that only the foreigners have the money. South Africans, there's business people. And amazingly, we've seen 20 million rand purchases of people under 30. Now, whether that's influence, I don't know, necessarily always. Well, we do know when we go through a purchase, but what I'm saying is, I don't want to now specify this industry, that industry, but there's a lot of business people and very innovative business people. I mean, we've dealing with a couple that they in finance and investments and all that, incredible sharp people that are now going into property development. And I look forward to the next. We've just sold one of their properties. We look forward to the next one they're going to build. And they late 20s or early 30s, if I remember correctly. So definitely not foreigners, and definitely not only the generational wealth or inherited wealth, whatever. No, people are making money. Where I'm seeing the most foreigners, a lot of foreigners is renting actually. Because with a lot of foreigners, you're finding that would be expatriates coming to work on a contract for a specific company. So that has always been, we had a very quiet period in the last 5-6 years. And because also my background was in relocations and we were dealing with work permits and all that, it was actually super difficult to get work permits for skilled people. I believe now, I've been out of the industry for a long time, but I believe it's now Home Affairs is working with everyone to assist that people that are skilled and high wealth can come. But those people will rent predominantly, and only if they've been here for long enough and say, okay, I actually want to semi-grade or whatever the case may be, then they'll buy. But yeah, no, South Africans are doing well.
I know they are.
Which is great.
There is money out there, lots of money.
Yes, and you're seeing that people, disgruntled with maybe, the other continents. Now there's a movement into South Africa because it's just, I mean, look at the weather.
Absolutely.
Look at the space. Yeah. Yeah.
People, I spent a bit of time with some international guests last week, and they were, one thing that they said is that every single person that she had spoken to said that everybody said that they love South Africa and
Yeah.
not move anywhere else.
Yeah.
So we really are fortunate. We have it. We do have it all. And
Yeah.
those that are lucky enough to travel can see how expensive it is
Yeah.
in other parts of the world.
Yeah.
It's they're not having a great time.
Yeah. No, absolutely. So get your bonds, people, buy your properties and get going. So what's your forecast for next year? Better? Same?
So I do believe there's green shoots. Now we've been talking green shoots for a while, but there's green shoots. We definitely expecting a downward interest rate cycle. We are seeing more and more first-time home buyers coming into the market. If we're expecting a 75 basis point cut over 2025, it's going to alleviate a lot of financial pressure.
What is that for the layman? So
it's
another
now,
75 plus the 25
no,
now?
to 10 and a half. To 10 and a half
But
by
what
2025.
I'm saying is, so if I have purchased a 2 million rand property
Yes.
and on a full 100%
Yes.
bond,
Okay.
what will I be paying more or less, obviously, depending on my...
So on R1 million, interest rate is 11.25% as we sit, is 11,250. Okay. If by the end of next year, that same R1 million will cost you 10,250.
So I'm getting
So it's
1,500
1,500 a month.
for Temu shopping.
No. You're putting that money straight back into your bond so that you can repay the bond quicker. Reduce your interest and get that property paid off. So it becomes yours.
Okay.
No Temu shopping though.
Okay. But that's quite a lot of free money, but money to put towards.
So if you take a step back and look at, if you had purchased a property at 7%, it was 7,000 Rand a million. You're now paying 11,250.
So you must have a buffer.
You must have that buffer. And nobody, I don't believe, there were people out there, but nobody believed I certainly didn't believe the extent of the amount of increases we would experience in such a short period of time, which created huge financial strain on the consumer. I mean, what is that? So it's 7.5, there's 11, so it's almost 5,000 Rand.
No, at some point I was like, stop. Absolutely. Already. Yeah.
So if it's on R1 million, it's 5,000. Imagine if you've got a 10 million Rand property. It's 50,000. So it certainly has, and just that sense of knowing that the interest rates are coming down creates some sort of optimism within the consumer in South Africa as well. We are very, as a nation, we are very interest rate driven.
Yeah.
And that is also because we like to take credit. Our country likes credit. So a lot of our disposable income goes to contractual debt. So the reduction in interest rates really does help free up that cash flow and give that home buyer, more hope that they'll be able to afford the property of their dreams.
And just to put it in perspective, and buy property versus buy cars, because your interest rate, you don't get the same rates on a bond as you get on cars or credit card debt. So then the interest rate going up is going to affect you if you spend too much on your whatever shopping you've done.
No, absolutely. Yeah. And also, I mean, your house is a fixed asset. So the interest rate, the bank holds security. So they can play around with the interest rate. A vehicle, the interest rates are high. Credit cards are even higher. Personal loans are even higher in interest rates.
Yeah.
See up to 25% interest on a personal loan. So, property will always be fundamentally what a person wakes up to dream and aspire to, is to put the family and in particular South Africa to create generational wealth for their family. There's many people in this country that have nobody in their families ever owned a car. Some people have got a degree, and when you're assisting that home buyer to be the first in their family to have purchased a property and for them to keep it for generations to come is just so amazing.
Yeah, no, absolutely. So looking forward then to 2025, we're definitely going to see a better year.
Definitely.
24, the various elections in South Africa and worldwide, I think people were holding their breath a bit too much, but I'm definitely feeling easing off the market.
So 2024, we thought was 2020 more. 2025 is 2020 jive.
Oh, you're going to jive for us?
We're going to jive all the way through the year.
Okay. And you're welcoming new bond originators into the fold. So if people want to choose that as a career, absolutely, go for it.
Give me a call.
You're still smiling after all these years. So clearly it didn't drain you too much.
It is a lovely industry.
Awesome. Thanks so much. Okay.